Now here, if the same income, you have the losses, on the same, you have the losses as income is not taxable. So then losses also you cannot adjust in the city computation. Losses cannot be adjusted in the city computation. Participating interest exemption, participating interest exemption. This is another big concept also. The first point is, hope is participating interest. What is the participating interest? You have the as the shares buy from the local company and you're getting the dividend is exempt. But how about if you're taking the dividend from the foreign company? You have the buy the shares of the foreign company and you are taking the participating exemption. Okay, the participating interest, losses on taxable activities, non-taxable activities. The concept is remain same. If the income is not taxable, the losses also will not be deductible. Losses cannot be carry forward. Losses cannot be carry forward in the future also. Okay, let's see. Participating interest. If we buy the shares of the foreign company, so we'll get the dividend. If and the local company dividend we already said is the exempt, but the participating exempt. Sorry, the local dividend always exempt. We don't have to calculate all this calculation. The participating interest share the exemption, foreign company dividend, gain on selling of shares. So from participating interest, we will have two type of income, the dividend as well as the gain on selling of shares. So gain on selling of shares, it might come from the local and foreign also. So what is the understanding of the participating interest? I would like to understand from you guys, what is the understanding over here for the participating interest? I appreciate if you guys share understanding over here. I would like to volunteer you guys, because if I continue, you guys may be not able to understand that part. Participant. Okay. Please send me a message. I'll open the mic of the participant who want to answer on that understanding. Quickly, only the person who have the understanding of the participating interest, quickly. Guys, I appreciate if anybody would like to participate. Kamal. Okay, fine. Okay, any other person? Any other person? Okay, Hinjal Kaval. No, sorry, Hinjal Makhanwa. Sorry, Hinjal, would you please unmute yourself?
Hello.
Yeah, sorry, sorry, your name. Please explain what is the understanding in this record.
So, if judicial person is having shareholding in another company for a non-resident company, more than 5%, it's called participating interest. And he's having like the holding period should be at least for 12 months. So
Any
if
other?
and if that company is paying, it means if that company is paying the tax, then both the companies should not pay the tax on the same income.
Okay, thank you, thank you. Okay, here the Ms. Kinjal already explained the point. I'm gonna explain you in the same. Let's say we buy the share of the Apple. Let's say this for the understanding purpose, we buying the share of the Apple, or the WhatsApp, or the Facebook, or any the share we buying, that is the company in the outside UAE. So if that share you are buying from the outside company, the foreign company, so you the condition to take the exemption, all this exercise all the understanding we are doing to get the exemption. What is the exemption? We will not pay the tax. The simple, okay. Participating means we buying the shares. What is the participating? The word interest is the share. If the participating, we participate in the shareholding. If we in common understanding, we are participating in another company shareholding. What would be your participating? What would be your shareholding? City law is saying more than 5%. 5% or more than 5%. Or the minimum investment is the 4 million. Or the minimum, even your shareholding is less than 5%, but your amount of investment would be 4 million. This is the condition, but this is the complete topic. We will go and in that topic we'll have the example also for understanding. So now if we meet this condition, because local dividend we already said is the exempt. The foreign dividend, this condition has to be satisfied. If it's satisfied, yes, that in dividend will be exempt. You will not pay the corporate tax on that income also. This is the criteria to get the exemption while having the shareholding in participating interest in the foreign company. The same way we will have the capital gain or loss on selling shares on local also and foreign also. The same way, if the first principle is satisfied, the second will be satisfied. In UAE, we don't have the capital gain tax, the same corporate tax. The gain also will be calculated under the standard rate at 9%. Foreign dividend income and the gain will be part of the calculation if the other condition is not satisfied. If we seen this condition are satisfied, condition are met, then it will be exempt. Ms. Kinjal already mentioned the other condition also, that keep the 12%, the 12 months. For the dividend, if you take the foreign dividend, your intention to hold the shares is at 12 months, is not actual holding is 12 months. Here we mentioning if your intent to hold for 12 months, if you meeting the condition of the 5% or you 4 million, and your intent to hold the 12 months, then your dividend will be exempt. But here the participant, they are asking, what if we sold the shares? What if we sold the share before the 12 months? What if we sold the share before 12 months? Okay, at the time of return, you are filing the return, you have the intent, but after the year end, when you file the return, you sold the share. So in next return, it will be taxable. Next return, it will be taxable. Okay, now the capital gain, in terms of the gain, they're saying actually holding period is a 24 months. Actually holding is 24 months. Anyhow, we will go in detail, but hope the concept here we are saying our topic is here, the losses on non-taxable activity. If this income is, we already claim the participating interest exemption. So if the losses on upon sale, if there is a loss, that also will not be deductible. So this is the understanding. Now the personal expense is generally not allowed. The nature of expense is the personal nature is not allowed. Okay, here the illegal action, bribe payments. Okay, these are if you are giving payment and you are recording the expenses in accounting, but in the city computation, you have to add back disallowed. The last, any other payment by the ministerial decision or cabinet decision, any other expense or payment that you made per ministerial decision is disallowed, so that you will add back. So these are the 5 points. Here I summarize again these 5 points. The list of non-deductible expenses, 12 item, Article 33. Here the donation, gift, grants to the qualifying, to non-qualifying public benefit entities, illegal acts, fines, penalties, bribes, payments. The point 3, dividend or profit distribution to honor and payment. Any payment not fixed or contingent on financial performance. Drawing for personal use. Irrecoverable input VAT. 50% of entertainment expenses of supplier, customer, and shareholders. Interest capping rule. Interest limitation rule. We familiar the personal expenses. Expenses incurred to get non-taxable income, domestic dividend. This we already go through that. Losses incurred on non-taxable activity. 11 is reasonable apportionment. 12, any other expenses as per ministerial cabinet decision. Guys, quickly give me the response. I hope this point is understanding. This is as so far we covered only the point number 9. Point number 9. Just now we have the detailed understanding. The say if we have the participating interest, which means the income receiving under this shareholding, under this activity, under we buy the shares. So we are getting the dividend, we are not paying the tax. If we are not paying the tax because we met the condition and we got the exemption, then if in future when we sold these assets, then loss will be arise. Okay, if you're selling, the share price is reduced, you are selling, you have the loss, that loss also will not be deductible. The losses in accounting, you may be minus, you already deducted, but for city computation, you have to add back. Why it is not visible? Okay, guys, maybe the color is not visible. Any of these points already we covered. So maybe due to color combination, it might not be visible. But and the sequence is also not the same. But mostly we go through in detail and 12 point. Add back point. See, add back point, we is the point number first, and we have the very detailed understanding on that. Later on, you go through the recording, you will understand that, please. So here the interest limitation rule, BEPS region action plan 4. Okay, there is a detail we already go through. Here is summarized version, but we'll discuss later. This slide. Let's take the example. Because the journal interest deduction rule. Corporate tax liability calculation. Determine the taxable income and UAE liability in following example. Assume all parties to be taxable. Okay, guys, quickly go through and give me the answer on that. We've seen in the last session and today also we go through quickly. I appreciate you guys to work on that. So let me share it. Please confirm now screen is shared. Still not.